Hello and welcome to Chapter 1 homework. We're going to go over some of the basics of the questions, and we'll warn you if somehow the information is going to repeat with little changes. I probably going to skip that if I've already gone over it. Again, homework is there to help me analysis how well you are doing. So, this is Chapter 1. Not too bad. Here is the Pearson little layout. You have some assigned media right here. You have question help if you need to go, e-text, help me solve this, calculator. So we actually have a nice little calculator right there. But I'm going to use this calculator. Nice, big, bold. So first off, let me see if I can make this a little bit bigger for this question. This is question number 1. And this is really getting you back into the accounting equation. So remember, accounting equation is assets equal liabilities plus equity. So all you're doing is trying to find the answer. So find the missing variable. So first one is 25,000 plus 43,000. So we end up with 68,000 in assets. Okay. Now you're going to see me, since this is the first homework, I may be trying things out just to see how they work as we move forward. So apparently I have to put all the numbers in for them to check the answer. Yeah, because they found out this is right, so it's sheeted in. So now all I have to do is do the remaining. So see, and check my answer does help you out. So starting off next, 71,000 minus 71,000. And we're going to subtract, since assets again is our total, the equity in that question, which makes it 32,000. And then we just do it for the liabilities. This one's really not that on level of difficulty. This is probably one of the easier questions. And again, it's chapter 1, 4,100. Okay, so check. It says everything is good. Excellent. We can even go to the next question. Now, when you look at these, also notice if it says similar to, I can go over these. If it just says static or book, I'm not able to, because that's basically giving you the answer. I don't want to do that. I want y'all to try your best at getting some of these. So, Novelty Interior Design Center started 2018 with total assets of 21,000 and total liabilities of 5,000. At the end of 2018, Novelty's total assets stood at 16,000 and total liabilities were 4,000. Okay. So, did the stockholders' equity of Novelty Interior Design Center increase or decrease during 2018? By how much? Okay. So, looks like there's our drop-down menu. And then, of course, we got to put in the number. So, we basically got to figure out what's our stockholders' equity. So, with this one, again, I have total assets, total liabilities. So, using the accounting equation, again, assets equal liabilities plus equity. I know if I take 21,000 minus 5 grand, I'm at 16. And again, your numbers are going to be different because this is similar to, but the concept is going to be the same. So we went to 16,000 and 4,000. Okay, right here, there's beginning, there's ending. So overall for me, it actually did decrease. It ended up decreasing about 4,000. Oh look, different line. Fantastic. Oh, that's actually pretty cool. See, told you, this is like the first time that I've ever done this, so you gotta hit check my answer before you can move on to the next part. That's actually pretty cool. That's nice. I like that. So, identify the 4 possible reasons that stockholder equity can change. So, stockholders' equity can increase through, well, which one of those would actually happen? And I can already tell you, this is a static part. So I actually want to see how you can figure this out. So how do they increase? Well, stockholders' equity increases through a credit. So that means we have to actually look down and which one would cause a credit. Mostly it looks like whichever one's different. Yeah, the different one on these, the one that's not the same, that's the one you pick. Here, decrease. Now this one actually does work a little bit different. So you can go ahead and try this one, just selecting the drop down menu and picking. So for instance, issuing of common stock would increase equity. And let's do a decrease. I'll do one of each. A dividend payment will decrease. Okay? So what else would increase and decrease it? Alright. Yeah, sure. So don't leave the question until you complete it. Alright. I actually do want to see y'all do that one. That one's a more static problem. Okay. At the end. Part 2. Let's see. Tranquil River Spa reported revenue of $40,000. Total expenses of the year were $30,000. Okay. Tranquil River Spa end of the year total assets of $32,000. It owes debts totaling $11,000. In that year in 2017, the business reported total assets of $22,000 and total liabilities of $11,000. Alright. Begin by identifying the formula to calculate net income and enter the amounts to solve for net income. Well, net income is always revenue minus expense. So that's taking 40,000 minus 30,000 will equal 10,000. Okay. Second one. All parts are showing. That's cool. Tranquil River Spa equity. Let's see. Liabilities did not change. Own debts. So actually, let's go ahead and do this real quick. The same thing we did before. 32,000 minus 11,000. And then 22. It looks like it still decreased by 10,000. Now, end of the year was that. This wording's kind of weird. Either way, I think it's actually going to be increase. Yep. Increased because we had net income. Go back. And there we go. Oh, look, there it goes. It lets me go ahead and put it in. It's not bad. Yes, just don't submit it till the end. I think you can actually click similar question too and see if you can pop up a new one. Okay, this is book static. I cannot do that one. Okay, this one's a little bit interesting. Alright, Lucy Steinbeck opened a medical practice during July. The first month of operations, the business titled Lucy Steinbeck MD experienced the following events. Let me see. I don't know if y'all can see this. So, let me see if I can go to Google Docs. Just to be safe, I want to do a Google Doc. And let's see if I can copy and paste it to there. Oh, that was not good. We'll do it this way. Right here. Go. This. There we go. So, we're going to try this. If y'all did see that window, I'll find out once I go back through this video. If not, then you know what just happened. Good job? Yeah. Okay. So, here's our transactions. May have to do this for everyone that has those pop-up windows. We'll have to see. Okay, so July 6th, we received a contribution of $56,000 from Steinbeck. Oh, excuse me. And opened a bank account in the name of L. Steinbeck, MD. Corporation issued common stock to Steinbeck. So, make sure we read this. Complete only the necessary answer boxes for your transaction lines. Do not enter any zeros. For transactions with the same date, be sure to enter each transaction on separate lines. Blah, blah, blah. Okay. So, we know from here, we received $56,000. So, of course, that's going to raise up my cash because my bank account got money. And then, of course, it's also going to raise our common stock because we issued out common stock. Then we enter in the numbers, hit check answer, move to the next. Okay. So, next transaction. Paid $48,000 cash for land. So, what happened here? Well, first off, I know cash, we paid money, so cash should actually decrease. And why did we pay out cash? Well, we bought land. So we took ownership of land. So here, I know this will decrease by negative $48,000. And then land is going to increase. And since that's our only number there, we can go 48,000. Boom. We have 56,000 in stock. And again, our job is to stay in balance. So, how much cash do we have left? We take 56 minus 48. We are left with $8,000. Oh, I feel like we're going to need a loan soon. Right. Oh, okay. So they want zeros for the rest. Okay. 0, 0, 0. There we go. Check answer. Fantastic. We can move on to 712. Okay. Let's go check what 712. Okay, again, analyze transaction. We purchased medical supplies for $2,600 on account. Okay, big keyword is on account. That's going to lead to either one or the other accounts of either accounts receivable or accounts payable. Now, if it's accounts receivable, we are expected to receive money. If it's accounts payable, we're expected to pay money in a future date. So if we're purchasing, we're probably going to be expected to pay money later. So what do we purchase? Medical supplies, and they happen to be worth $2,600. So again, there's our medical supplies. So we know it must increase. We took ownership of those supplies. And here, we only have one of those on accounts. So, do we have some money to pay? Yeah. We have to show that we have this obligation to pay $2,600 to whoever we did on account. Could be just the credit card company or anybody else. Boom. And then it's just put in totals. Put in the totals. 0, 0, 0, 0, 0. Check. Fantastic. Moving on to 715 now. Officially open for business. Did we actually do anything? To be honest, we opened for business, but we have no economic transaction there. So, everything stays the same. Whoop. I like those. All we have to do is bring down the balances and we're done. So, 720. We paid cash expense, employee salary, office rent, and utilities. So we actually have 3 going there. So let's see what happens when we have multiple. So each transaction has to be separate lines in order presented in the problem. So they knew this was coming. So the first one, we're going to pay the employee's salary, and we pay it by cash. So again, if cash is being paid, it will go down. So that was, for me, 1,100. So that means my expense, their salary expense, it's going to be 1,100. So again, gotta take 8,000. We're at 6,900 in our cash. Not too bad. And bring down our totals. Now we got 1,100 there. And check. Okay. Okay. See, I read that, and you see that? It says, for transactions with the same date, please be sure to enter the transaction on. Now that's just. So, we're actually going to total these up because of this fact. But usually these are separate, things going on the same day. So I think they're going to mean the 31, but instructions. Oh well, it is what it is. So that's 1600 and 400. Okay, so the total of those, so 1100 plus 1600 plus 400, we're left at 3100. So this one is at 3100, and of course take 8,000 minus 3100 now, we're left at 4,900. Check. There we go. Awesome sauce. So this one, we do earned service revenue for the month of 12,000 receiving cash. Well, of course, we performed the job. We earned money. So we earned, 12,000. Service revenue is this one. Okay. Cash is going up by 12,000. This is a little bit easier math. 16,900. 2,600. We gotta have dividends coming up. I feel it. Dividends is coming. Go check. Okay. So, last but not least, the last one. Paid $1,850 on account. Oh, we did not have dividends. Wow. So, when we pay on account, again, we had the word pay, and there's only one way to pay. It's usually by cash. So, $1,850. So, since it's on account, the only on account we got is accounts payable. Again, we're the ones paying. So, our liability should go down. Because that's like you paying any of your bills. Do you still owe that money? No. So, quick math. It's $1,850, right? Yeah. So, $15,050. And then do it for accounts payable. We're now left with $750 that we still owe for buying those supplies. And then the rest stay the same. Okay, check. We are done. That's it of this question. Again, once it says all parts are showing, we know we are done. Now we can move on to the next one. Which, of course, we get to prepare an income statement for Wayne's Tower Servicing for the month ending June 30th, 2018. Looks like we've got a data table, which, let me go post it. There we go. Okay, there's our data table. Y'all can see it. Now all we're doing is going to transfer these into our income statement. So first off with the income statement, always start with the company. Then what document we're doing. We're doing the income statement. And this is for the month ending June 30th. Remember, it's a period statement. First thing that always pops up is revenue. So let's check our revenue. Service revenue of $14,500. Okay, remember, revenue is always first, and then that means expense comes next. And boy, it looks like we may have 3. So let's see what expenses we've got. See, equipment, nope. Office supplies, nope. Notes payable, nope. There's rent expense, let's use that first. I like that it has a drop-down menu. So rent expense was $550. Okay, let's go find another expense. Cash, no. Dividends, no. Accounts receivable, accounts payable. Retained earnings, no. Last one we got is salary expense of $2,000. Notice this, we already did all of our expenses. There is no more expense. So we can actually leave this block box blank. Okay, let's find our net income. Remember again, revenue minus expense. 14,500 minus 2,550. 11,950. Okay. Let's check. Everything's good. Again, solid out. What does the income statement report? Now, since this again is all parts showing, I'm going to actually stop here. I want to see if y'all can get this. Okay? So what are they reporting? First off, what accounts are we using? And is it specific or just a period? There you go. There's your hints. Let's go move on to the next one. Okay. So now we're promoting or billing a restatement of retained earnings. Okay. So I'll be honest, these are different ones than before. So I'm going to put these in the Google Docs. I'm going to delete this one and paste a new one. So this is the one that we're going to be using for retained earnings. So when we do retained earnings, we again have to start with the company, statement of retained earnings, and then again, month ended. And we always start with beginning. Okay, so 3,900. Okay, next we add the net income, which we actually have to click the icon for net income. So I'm just going to say it. It's going to be 8,150. Okay, so click that icon to get to the net income, and then we just add the 2. Equals 12,050. Okay, and then next we always subtract out the dividends, which we can find here. Happens to be 4,000. Okay, and of course the difference is 8,050. Okay, check. Everything's good. Again, watch out for the headers. Make sure you always add net income and subtract dividends. And again, see what you do for the report. Alright. Alright. Woo! I guess now we're finally to our last one. So, balance sheet time. Oop. Company first, always. Balance sheet. And then the balance sheet is always a specific time. Okay? So again, I want to take this, put it on my Google Docs. And now we get to pull out our balance sheet. So, starting off first, our assets, remember, our assets are always in order of how quickly can we basically eliminate them or turn them into cash. So cash is always number one, sitting at 2,000. Okay. Now looking at, we got supplies, payable, expense, cash, dividends. Now we got accounts receivable. We have supplies. We have equipment. Looks like we got payable. There's our equity. So that's it. So accounts receivable is usually next. That was 8,200. Yeah. And then we'll have office supplies at 1,300. And then looks like we'll have equipment at 12,800. Okay. Make sure. Yep. Okay. And then at the bottom, we have a lot. Yeah, we have a lot, but nothing is being used. So we are currently at total assets. Okay, so let's add these four up. 2,000 plus 8,200 plus 1,300 and 12,800. We're looking at 24,300. Okay, so this is where our liabilities and equity must meet. Again, these have to be in balance. So, starting off first, our liabilities. Accounts payable is always number one. So 4,000. Then we have notes payable, 6,900. And then this one's a little bit easier math right there. Of course, that's total liabilities. And now we deal with common stock and retained earnings. Usually those are going to be the only two you're going to see right now in stockholders equity. So common stock, 8,000. Then retained earnings, we're going to actually have to go look for. And it's going to be this statement of retained earnings. And if you can't see it, it's at the bottom. Once you click it, again, that's your ending. So for me, it's 5,400. Okay. So this is actually 13,400. So if you add those two together, 24,300. Okay. So again, you add your total liabilities and your stockholders' equity, and you come out to your answer. If they're correct, you're good. So we hit check. And again, everything's okay. Now it's time to fill out what does the balance sheet report do. Okay. So again, select the arrow and pick the best response. Basically look at what accounts are being used. But that's really it. That's the balance sheet. So let's see what the last one is. Okay, so Ali Pavone recently opened her own law and so forth and so on. Okay, so all this is analyzing the transactions again. But this one's actually an overview of all the items. Nah, okay, it's 18 parts. It looks like it's just doing the transactions. So since we already went over transactions, and if this does provide financial statements, which, let's see. First, calculate the balance in each account, analyze its effect. After calculating, yeah, all I see is an analyzation, be the requirements, and you're going to prepare the financial statements. So yeah, you're basically going to be doing everything. So if you have a question on this, please let me know. Remember to hit save, and you'll be good to go. But this one is just basically an overview of everything we've done, except for the statement of cash flows, but that one's a little bit easier to do. That one, if you do get questions on it, just send me an email, show me a screenshot, and I'll help you through it. But that's it for chapter 1. So I will see y'all for the next homework video.